So this is Black Box, and today we will be doing what we always have done. So today we will delve into market structure and how we can use market structure to trade the markets and market including commodities, crypto, currency, futures, all the markets. Okay. So the first thing you need to do is, as always, identify your black box. Okay. You need to identify your black box. So just like I told you, so black box means it is a 3 candles consolidation, right? A 3 candles right there, just like that. 1, 2, and the third one overlap and traded up. That's a good thing. That makes it a black box. So what we need to do here is we need to see if price has hit TP2 or not. Alright. So you put your Fibonacci, top of the Fibonacci at the top bodies, and the bottom at the bottom body right down there. Okay. So as you can see, TP2 never hit. It was not hit. So most likely price is heading there to hit TP2. That's take profit too. If we caught this thing when it was down there, then we would have caught this run. As you can see, this was a beautiful run. And again, another attempt into an OTE or optimal trade entry. So we'll talk about that later. So as you can see, optimal trade entry when we made from up there. So we need to identify premium and discount for this swing. As you can see, from swing high to the swing low, which is down there for this price leg. This is the swing low. This swing low is responsible for the break of this swing high. Okay, so this run is our range. This is our dealing range here. Okay, this is our dealing range. So what did the price do? It fell below what? It fell. So this is this one from the lower leg to the higher leg, right? So let me, as you can see, TP2 is hit for this black box. Let me pull out this one, so it will be clear. From the swing high to this swing low, as you can see, this is a swing low. Price percent 50%. As always, that's an optimal trade entry. And then it fell short of 38.2, right? As you can see, that is nice. That is a good place. That's a good position to enter a buy after price has showed us that we are moving up. Okay, so this is the optimal trade entry, including 38.2 and 23.6 down there. Okay, down there. So we don't really want the price to come really down into a discount. If it wants, it can come, but what we really want is 15% and below, half of this range and below. Okay, that's a good thing. And when on top of that, when you have an imbalance and an order block here, we have an order, so price supported is open of this order block here, and they rallied up, moved up to our TP, right? Moved up to our TP. So this black box is done for now. We can actually delete it, because as you can see, when you measure from the body, just like I showed you before, this body, where was it? It was down there. Down there to down there's bodies, then tip it was hit, and you put another extension up, and then you will get the best TP you can get. Okay, the best take profit is up there, not only TP2 but a little bit up, as you can see. Then price what dumped, it dumped. Okay, for another OTE, this is another entry for higher prices. Why? Because we didn't quite reach the TP of this swing, as you can see from this swing low. This is the range, so you double this one up there. So the TP for this range will be up there at 1.01400 sharp 400. TP will be up there. So anyway, that would have been a nice play right there, that buy. And then inside of here, when you go to the time frame, that the market is moving up. Why? It is because, as you can see from here, around here, we need to see the structure, the market structure around here. Okay, around the black box that we are interested in. So I'm interested in this black box, so I need to see where it is sitting in terms of the larger leg. Okay, so I can deduce if it is on the premium or on the discount. So right here, what do we have? We have this black box here. So price was initially bearish, right? Why was it bearish? It is because we took a swing high. I mean, we took a swing high up there, right? We took a short-term low here. Boom. So price was bullish. It was making lower high and then higher low and higher high, higher low and higher high. As you can see, higher high and higher lows and higher high, right? All of a sudden, what happened? We made a lower low, right? So now what do we have? We have here, if you can see it, we have here a break in structure here, and then a break in structure above there. So once when price was down there, I was watching this swing high. Okay, this swing high, this is a swing high. Once that swing high has been taken by this candle, right there. I don't want an auto scroll. Where is it? Don't auto scroll, please. Once this swing has been taken by this candle, I said, can you see it? Okay, you can't. Now you can. Okay. So down there, what do you see? This swing high was taken by this candle, this bearish candle, and close below. So now, price made the low, then came back up, and then tried to break this, but it couldn't. So it made a swing low down there. Then it broke finally, right? So this leg is responsible for this move higher. This leg is responsible for this move higher, right? So we'll use this range, not this range. Okay, we are not measuring from down there. No, we are measuring from up there. Any premium or discount. Then to the high, wherever that high is, until the swing high is formed. Okay, until a swing high is formed. Then price just kept pressing higher and higher and higher with break of structure, with there is no change of character. It was bullish. Then all of a sudden we made a swing low here, as you can see it. Okay, there was a swing low, and then finally we pierced this swing high, showing a bullish momentum. So what do we need now to continue higher? We need the price to come to an optimal trade entry down there. But since we already have done that, I said there is no need for the price to come back unless you send the price higher on the premium and then put it down to the discount. Okay, so they pressed the price higher, they took the liquidity up there, and then now they need to move to the discount. That's why they came down here. They came down here, they took the liquidity down there too. Now, since we took this short-term low, now I'm flipping my bias, okay? My direction is now flipped to the downside. So price now, after breaking this, we kept pressing higher, okay? We kept pressing higher. When we are bearish, I want the price to stop dead at this optimal trade entry area, this one. Let me use a Fibonacci. Okay, we are bearish. When we are bearish, this swing high to this swing low, that pump up there needs to stop around this area. If it wants to go deep, then it can go deep there. 23.6, then dump. Sometimes these kinds of things happen like this. They will take the liquidity. So that's why we have risk management. That's why we are entering lower small positions of trades, not risking 100% of our account or amount and then blowing it up. These kinds of things happen. So we need to be careful. So price pumped and then it didn't stop here, showing that we could likely be bullish. But as you can see, we didn't close with a body. It really closed with a body down there. We want that. That's a good information. It was like a sweep. Like a sweep means it is just a liquidity grab. Just take out the liquidity and then just dump it to the downside. So that's what they did. As you can see, that is just a break and retest play right there down. They moved it down, dumped it. So if we were bullish after this break of structure's upside, then we would be respecting this swing high, but we didn't. As you can see, the price should show us some reaction. It showed us some reaction down there, tricking buyers that it is moving up. So a lot of people will be buying down there, thinking that the price will continue moving higher. So right there was a weak, as you can see it here, there was a weak rejection, and then that was the next candle was bullish. So you would think that price is pressing higher, but the price said nah. It closed with a body below deep discount, and we don't want to see that. If it was very bullish, then 50% is great, and then below that is 38.2, and below that is 23.6%. So it cannot go below that, and it should not close with a body. Even if it closes with a body, that is a red flag. That's a huge red flag that this is dumping. Okay, so after that I came here to show you the structure that we are in. Okay, so we are bearish now with a swinger. We have a low here with a swing low down there, right? After that, we made a swing high here. We made a swing high, then price came down, took out the low. And well, good job. Then what happened here? Swing high from then swing low from here. Finally, price broke the swing low, right? What is happening here? What is happening here? Price just kept pressing higher, right? Kept pressing higher, breaking the swing high right there, then a retest into a 50%. A 50%. I don't think they reached 50%, but let me measure it. From up there to down there, we have this swing. This is our dealing range now, okay? This is our dealing range. Not this one, not this one, not this one, not this one, right? So what happened here? Price came down and then touched what? As you can see, optimal trade interest 38.2. Hit and then boom, smashed it upside. So now our interest is so our interest is what? This area right here. This area right here. Okay. Price kept pressing here, all of a sudden came down. Alright. It came down and then took out this swing low. This is a short term low. This short term low took out this short term low. After that, price retested, traded down, retested, hit this imbalance, as you can see here. This is an imbalance. Hit this imbalance and dump it. And stop it right at halfway of that wick. Okay, this wick. So wicks are treated as gaps, like these kinds of fair value gaps. So wicks can be used as gaps, okay? They can be used as support. So what happened here? So I'm trying to find structure that the structure we are in, where we are. So now the significant structures here are these. Okay, so since we are inside this leg to this, and finally this broke, is there? Okay, so this will be this one to this one until that one broke it down there, swing low now. So this will be this one to this one to this one, and then we have a swing high here. Okay, there are internal structures too. This is the external one. This is the external one. Why? It came down from the external range to the internal, took the short-term low down there, and then now this is the one, this is the range. Now this one is overtaken by this one. So now we have this. Okay. So after that happened, we have this press higher. This price pressing inside of this. We made a swing low. That swing low broken, inside of this still, that now is broken. This external range is now broken, so it will be from down there to up there. Okay, will be down there to up there, our structure. So internal structure is, this is a swing guy, then this swing guy was broken, this swing guy also, right? But that is still intact. As you can see, we didn't break that. What happened here? We broke that high and then supported. Then here touched this order block, but there was no actual gap, just the order block was hit, and then price started pumping to the upside, right? So from up there, down there, boom, external to internal. Now our range is from there to there, and boom. So now our range is from there to there, boom. Now our range is from there to there, boom, right? From there to there, price retracted, and boom. So our range is now from there to there, right? Internally, we pressed higher, we broke structure there, and now we pressed down, pumped. After the optimal trading trade, right? We pumped up. Then after that, we came down again to that optimal trading trade again. So this high was overtaken by that. We are still in the internal range. Okay, still we are internal market structure. This is the internal market structure from down there to up there. Okay, so what happened? If we were bearish after hitting the optimal trading tree, we should have headed down. So that high to this low. According to this, we are still bearish, right? Still bearish, pressing down. But there was no body close down there. There was no body close. So there was no body close, but still we were bearish. Why? Because this range, this swing low was broken, but not with a body, but with a wick. It was a wick broke it, right? So we pumped up, came down, we made a swing low, then pumped up. So our structure is here, not here, down there. Okay, I'm wrong right here. So our structure is this one. Then we broke. So now structure is from there to there. Then we broke. So our structure is from there to there now. So we expect price to go up, but what happened? We dumped. If we break this one, then our structure will be from up there to whatever swing low is down there. Okay, so we want the price to come to optimal trading area, that is 78.6, 61.8. This area is piece of cake. This is cherry picked area. This is a good place, right? This is a good place. This is where 80% price, 90% will reverse. But that didn't happen. As a consequence, 50% it collapsed, hitting what? Nothing. Didn't hit nothing. Alright. The gap was closed. This void was not even traded up. So it just came up there. It just traded up there and then closed to 61.8, and then to trick people it came down, right? It came down and then what happened? We pressed higher. We should have went lower, but we pressed higher. So internal structure here. Internal structure, we came down, right? Now it is from up there to down there. Then we made a swing high, right? So market traded down, then boom, we broke this low. So now this is a new low. And we have this swing high. Then market pressed higher, taking this swing high. So this is what? The new swing high. Then pressed higher, another new swing high. Pressed lower, at is optimal trading tree for a buy, right? Why? Because we change it to a buy down there. Boom. Finally what happened here? So where was us? Right there. So we were going up, and then now our swing is from that high to this low, right? So you apply your Fibonacci to identify the 61.8 retracement area, your discount under the discount area. The price came down there, and then we should have seen some kind of reaction, but that didn't happen. Just price dumped. Price dumped, took out this low, so there is no entry there. So what do we do? Now this low, this significant low is broken. So which means we have this high to this low. And once the price pumps and respect this optimal trading tree, then we should be going lower. But price said, nah, I'm not doing that. I am not doing that. So as you can see, so from that low to that high, this high, since we broke the downside, even with the body, but we didn't close with the body down there, but right there at 50% and 61.8 to 78.6%, right there, price should have left that area to the downside, but that didn't happen. So finally, this structure broke the upside with a swing high, with this swing high, right? So this swing high is a new high now, a new range, our range, to this swing low, from this swing low to this swing high, we project our fib. Then what happened? As you can see, price dumped. Hit that optimal trade entry area. Look at the precision there. That is crazy. That is crazy. That's good. So right there, snap it back up. So buy. That's a buy. That is a buy. Then price pressed higher. Okay, let me make it small. Then the price pressed higher, right? Pressed higher. What does that mean? It means there is a break of structure. Where? Right there. There is a break of structure right there. We broke. We have a new swing high to this swing low. Then price retraced. After this swing low breaks this, we have a new range from down there to up there. Did the price come down to our optimal trade entry? No, it didn't. From that swing high to this swing low, price didn't make it. Right? Oh, it actually hit 50% right there. That is crazy. So 50% and then price bumped. Then what happened? Then this swing guy made a swing low down there. Then pumped. So we have this swing guy to this swing low. Again, what do we have here? Another optimal trade entry that I was telling you. As you can see, 38.2, a little bit short. It fell short and then pump. Then this swing guy was overtaken by that after making this swing low. So we use that swing low to this swing guy and then see what happened here. So we had a reaction. It was a deep retracement, a deep retracement. After that, price pumped, another dump. So then pumped, okay. Then after that, when you see the internal structure, we had a swing high, then a swing low formed down there. Price pumped, took out this swing high, right there, right? So which makes this swing low what? Range for your internal projection. So this is swing low. So from there to there, that is your price. High to the low. So you want price to come down to what? 50% and below. But did it? Yes, it did. But did it respect? No. The body stopped at 23.6%, but then dumped. It dumped, showing a bearish trend, showing a bearish change of character. And on top of that, we didn't break this swing high. Okay, that swing high was not broken. So most likely that could be a long-term high, but now they broke it afterwards. Long-term high should not be broken until the lower liquidities have been swept to the downside. So what happened here? Price dumped, took out this swing low. So the internal structure now shifted to bearish. Then took out the external range swing low too. So now we are really bearish. So you measure from your swing high to your swing low. Then wait for price to trade to your optimal trading trade. Did it? Yes. Yes, it did. And it dumped, but it didn't hit your take profit. What did it do after hitting the low hanging fruit? That is the swing low. That's where you should take your partials and trade your stop. Then what happened? Price made this swing high and then made the swing low down there. After that, price retraced. Right there, we should have seen some kind of drop, but that didn't happen, showing a bullish momentum. So we are essentially here ranging, okay? We are in a range now here. So price pumped, took out this swing high, then what happened here? Took out this stop too, then that one too. All we care is about this one. So this was taken. So now we have a new swing high up there, right there. That is the highest high. So you take that, you invert this one. Why? Because we are bullish. And then what do you do? Is there a swing high here? No, there is no swing high. Then so we use this low, not that swing low. Why? Because there was no swing high here. There was only break of structure. Right there was no swing high. So now all we want from this price is to come down there. To come down where? Down there. So optimal trading tree. 38.2 and 23.6%. Okay. Where is it? Right there, down there. I want this price to come down there. With alignment with that, aligning with that, what do we have? We have here an order block, which is responsible for breaking of this swing high, this order block. We use open. And then down there, we have this consecutive down close candles. These are all order blocks, okay? Responsible for breaking of this, then this, then this one. So you can see price reacted off of that one. It didn't even have a chance to come. It didn't even have a chance to come down to this discount area. It is now basing, supporting premium area, buying at the premium area. That's not a good thing at all. Maybe from when you see from this swing low to this swing high, since it was broken, we don't really need that one. Only we can see this price action before it was broken. So right there, it retraced back to a what? An order block here. An order block here also. It was this one that sent price higher. Took out this swing high. So opening price, you use that. I don't know why it specifically stopped there. It could have went down and hit this. This week's half, and then continue moving higher. because when you see the swing from down there to up there, really 50% is of course hit, but as you can see, the 50% was nailed, and it stopped dead at 38.2%. 38.2 right here. So as you can see, that's crazy. So it is in alignment, which is in alignment with optimal trade entries. The arrays that are in alignment with optimal trade entries are the ones that are going to be used as support or resistance. As you can see, this is aligned with the 38.2 right there. As you can see, this order block, and it hit it and it pumped, right? So this low is taken, and this low is also taken down there. Equal lows, it made equal lows. This swing low is the one that we are dropping to, right? It is all dropping to an optimal trade entry. It is not bearish. This is not bearish, right? As you can see, it is inside the range of this high to this low, right? Inside the range. So that is a market structure. So that is the internal structure here. If you measure it from down there, which is not broken, you can see that it stopped dead at 23.6%, right? And if you want to measure it from a swing low, which is the longest one, you'll see that we hit 50% and then just started pumping. As you can see, every swing is showing us that this is optimal trade entry, inside an optimal trade entry. You already know that price don't always come and hit that optimal trade entry and move higher. After doing that, as you can see here, it comes again and takes out that low. Of course, to generate liquidity, it generates more stop losses, but and trick a lot of buyers and sellers to enter here. They might have another intent for driving price lower again. There is no need to do that. We are already in the discount and we went up. What is the point of coming down again? What is the point really? Okay, so so this is a whole thing that I wanted to show you people. So price really supports. As you can see here, there was a swing high. There. Price came down, made a swing high. So from up there to down there, we have a swing. And this one is lower, So this is a swing low. Price retracted and took out the low. Down there, right? It closes the body and then swept it with a wick. A wick, right? It broke the low with a wick. So our range is now from this low to this swing high, not that one, not that, the bigger one. From this swing high to this swing low. Okay, so inside of that structure, as you can see, we had a swing high here, broken, another swing high here, broken, another swing high here, the last one broken. Final price came down, supported what? Supported this down close candle rising. Pump it up, just like I told you, one more time. They hit it one more time, taking out this stop loss, swing low, and then just pump it, change it gears, and targeted these highs, as you can see. Just swept that. After that, it was in a consolidation. Then after that, the trend continued. Then, as you can see, another range, and the trend continues. Okay. So really, the change was right there. So the internal structure, even though this was not the real swing high, the real swing high was that one. Why? Because this swing high, after this swing high has been made, it broke. It broke this low. So, as you can see, right there we broke this swing high. So, most likely we will see some retracement, and we got it down there. We got that retracement down there. Why didn't we just collapse it down there and move to the discount here? It is because inside of this structure we were moving up and support, swing high formed, boom, we hit it one more time. There was a swing low here, right? So that swing low was broken, the downside. Now we have this swing high to the swing low. So if we are bearish, we want the price to react and fall down, but that didn't happen. We were bullish. Boom, we broke structure. So this swing low was responsible for this break. So we take this swing low to this swing high that retraced back after breaking this high, right? So what did it do? It stopped there. It didn't even come down to the optimal trading tree. Let me show you. That is a low. Then this is a high. Should have seen a 50% retracement at least right there, but that didn't happen. Why? Because we have this order block. This is an order block responsible for this break of high, swing high, and then creating a gap here. This makes it a valid order block. Okay, and this imbalance is overlapped with order block. right? All of it. And as you can see, when that happens, when multiple order blocks are here, what you're gonna do is you're gonna select the first order block if we are bearish. The first order block that is formed, the first one, and it is opening price. Horizontal line. First order block here is this one, and the opening price is right there. Boom. They hit it, they supported, bam. They came down one more time, they hit this order block here, halfway, the main threshold or whatever. Boom, pumped, came down again. Then we have here half of it, boom. Why didn't we come down there? Because one, we had already retraced below discount area. There is no point in coming back down again. Two, we have a consecutive order blocks, and we have fair value gap coupled with a gap, right? So that acts as a like an open. It stays open. This imbalance stays open, okay, showing we are still bullish. So in this run, we are actually trading, not waiting for this swing high to be broken. Of course, after that has been broken, that now we know that we are really bullish, but before that also we were trading down there. Where? Right there, we broke structure, we came down, stopped dead right there. Why did we stop there? Should have come down when we measure from. No, there is no fan. We don't want the fan. The hell is this? So here we have, when we measure from the swing low to this swing high, the newly formed, because we are trading internal market structure. We are not waiting for that one to break or that one to break and then retracement. No. We are catching before a price just makes big moves, before a big moves unfold. There what happened? Price didn't make it to 50%. Didn't come down there, okay? From that high to this low, it didn't make it. So when you see there, we have two consecutive red candles, right? Before this big run. So price even did touch these blocks. So when there is a consolidation and consolidation is broken with a huge candle, an imbalance, which has an imbalance or a gap, then that tends to stay open. As ICT says, that is a breakaway gap, okay? A breakaway gap. Breakaway. It breaks and then moves away from that. It displaces. This is a consolidation, as you can see there. This is not a clean run. So we don't really expect price to come down to halfway and into the optimal trading tree, but eventually it came down, but not always like that. It's not always like that. So anyways, price pumped, then supported this, pump it up again. Now we are sure we are moving up because that is broken with body. We came down there, stopped there. We didn't even come down there. Why? When you take from this swing low to this swing high, then this high made a swing low right down there. Then this swing low was responsible for breaking this high, right? So now our range is from this low to this high. The price came down to the discount again. So that is another buy for you. Stop loss is still down there. That's another buy. Boom. And then price broke this high. Then another high. So that's our swing high. To where? Since we made a swing low and then a swing high up there, then that swing low was broken. So we are having a lot of resistance here, as you can see. A lot of resistance to move. It is actually accumulating liquidity, accumulating stop losses, buy stops and sell stops to further cut their positions and send them out, send the retails out. So from this low to this high, when you measure, they really brought it down and broke the low. Then, just like what happened here, okay? It is like what happened here. Right? Then, after breaking this, we pump it up. We didn't take the highs, alright? We could potentially even come down because this is not a good thing right here. Unless this is a height, this is not a good thing, okay? We don't want to see these kinds of things. Price can just support this halfway and then just move up, but it really came down there. Then boom, another dump, boom, another dump, right? Okay, we didn't even take the high up there, did we? With a tick rise there, we took the high. Then we dumped. High there, up there, to down there is your what? Optimal trading tree. So you use your fib from up there to down there. That is down there, right? That's the swing low, that's the swing, that's the new swing high. Even though that is negligible, it took the high. So even if it is a tick, it still counts. If it is a sweep, then we could see price melted down the downside, but that didn't happen. So as you can see, optimal trading tree hit. Either that sweet area, the body just stayed there. Finally pumped to the target, hitting TP. Right? Taking out highs here. Then after that, price pumped. There is no swing low here. Swing high mid. This is our swing low. Why? It is responsible for breaking this high. So this is our swing low now. Pumped. Then we came down to what? The optimal trading tree. This is optimal trading tree. So you use your fib from that high to this low. To this low, what do we have? A nice entry. Boom. Boom. Right? But look. Okay, let me turn off this. We don't really need the numbers. As you can see, look, after hitting that 61.8% here, below the 50%, what happened? Price pumped, right? But there was an order block there. It hit the wick, but not the opening price. Not the opening price, okay? When you see multiple blocks, multiple order blocks, you want to take the first candle, and just like what you did here, as you can see, we had a multiple order blocks. So I used the first one and then used it as a support. Just like this one, I use this one. The first one is open. As you can see, that is used as a support. Support is expected, boom, pumped to the highs, eventually taking the high up there. Okay, it took out the high. It took out the high. After that, we made a swing low down there. We made a swing low. If you wanna consider the internal structures here, you can also see that we had a swing high. Boom, we came down. There was no swing low or high. We made a swing low, and we made swing high again. We came down there. We made a swing again. We broke that swing low. Now this swing low is gone by this. So now this swing high is responsible for this swing low being taken out. So it takes this range from this swing high to this swing low. So if price was bearish, we should have seen a bearish continuation to the downside, as you can see here. But what happened? Price just kept pressing higher, finally breaking the high. So after breaking the high, there was no chance to get back in. So what does that mean? That means there is no entry. You are not gonna enter. That swing high taken, another swing high taken, right? We came down finally. We came down, right? So this swing low was responsible for taking out this swing high, right? What does that mean? So this is our swing low, not this one. This is our swing low to our swing high. So you take what? Your fib. Okay, we got a fib here. We can use this one. What the heck is this huge, bro? Okay, let me use this one. So where was I? I was around, where was it? It was around, yeah, it was around there. Let me delete this one on that line. So it is from that swing high, which is this one, to this swing low. Alright? Did price come below the optimal trade entry? Yes. Is this time to enter a buy? Yes, you enter a buy. And in conjunction with that, do you see any order block? Yes, I see an order block. Before the break of this high, swing high, there was an order block here. Single one, that sent price higher. So price didn't quite reach that one. And we have this doji too. This is another block too. Use that opening price too, okay? Didn't quite reach that one in the first attempt. It actually hit this order block, but it didn't hit this one. I mean, the body. Didn't hit the body. So price kept pressing higher, took out the high. If the high we have a swing low and the high is taken. This swing low is responsible for taking out this high. So we have a new thing here. Possibly we are moving to the downside, okay? So right there was our buy. We hit this wicks, the wick of the order block, but not the body. And then we have swing low, right? You put your swing low there. You put your swing high where? To the newly formed high up there. And then you wait for what? Optimal trade entry. Did you get it? Yes. Okay, from that's the swing low, right? Okay, let me zoom in on this one. This is the swing low that's responsible for taking out this high. This high and this swing low are the ones now responsible. So now I'm bullish. I want to set a reaction down there. Since I am already in a buy here, I should be able to get a reaction down there. Did I get it? Yes. Let me edit this one and turn off the main line. Values, okay. There is a wick there, okay. It went up a little bit. We had a reaction. In conjunction with that, do we have an order block or fair value gap? Not really. Not really. Not really. This is not a good order block. There is no gap here formed by this block. So we pass that. So we're not gonna enter a buy here. There is nothing in conjunction with this one. Right here there was a gap. There was an order block there too. There, nothing. I'll pass that. Price dumped. Good. Broke lower. This high to this low is now my new range. Okay. My new range. So price came down, made a swing high, and we had a swing low down there. I mean, we don't have a swing low. We really don't have a swing low. Okay, we have a swing high, but price came down, took off the swing low. Okay, so this now is the one I am interested in, not really that one. So I'll put my Fibonacci there. Put my answer right there. Yes. Right. So now this is the range I'm interested in. Since we are bearish now, I need to see a reaction in the optimal trade entry areas. Did I get it? Nope. There is no reaction. Just huge candle. It's pumping. Just pumps up, moved up. Right? Just huge candle. And broke this high. There was no gap. There was no nothing. So I don't have a valid order block here to work with. Price dumped, pumped again, took out this swing high. This swing low is not responsible for this one guy to be broken, and then this one too. So I have a new range here. Okay, so price is essentially ranging here in a range. Okay, in a range. So I want to see a reaction around here, and do I have a confluence? Do I have an additional in the OTE area, an additional order block or fair value gap? Yes, I do have fair value gap here. Do I have an order block? Yes, I do. Is it? Multiple of them. I have multiple. So I need to use opening of the first candle, right? So price should be able to support that and move higher. Did that happen? No. No, it didn't. What does that tell you? It tells me that we are bearish. We are bearish. We are disrespecting OTE. And finally we collapsed into causal low, came down there. Right? We came down to causal low. This high is responsible for this low being taken. We made a swing low. We pressed higher. Then we made the swing high, just like I told you. Then after this, everything I have told you, okay. There's nothing new here. So since it is 1 hour, market structure is a little bit complicated, but I promise you, if you back test it, if you look it at the price action, in the price action, live price action, or the just what price has done in the past, the history, you will understand that this thing is really helpful. Okay. So anyways, I will see you in the next one. Okay, thank you for watching.